Hello everyone and welcome to our Calgary real estate market update for July. The news is pretty much as you'd expect, that the market is just as hot as the weather is right now, but the real question is how long is this boom market going to last? Interest rates have increased and the issue of housing affordability has dominated the headlines recently. So can we expect this trend to continue? Well, for the next few minutes, I'm going to tell you all about how Calgary fared in July and what the outlook is like for the rest of the year. And I'll also delve into the politics behind all of the headlines, not only for Calgary, but for the Canadian landscape as well. Are you ready to rock? All right, well, let's go. Okay, well, as you might have guessed, Calgary's real estate market set some more records in July, with the most sales and the highest prices we've ever seen. Those of us that do market update videos can often sound like broken records, as each month it seems like we're telling the same high prices, hot market story. But this market is just a little bit different, and I'm going to tell you why. But first up, let's discuss July. When you look at the whole market, so averages across the 4 key categories tracked by the Calgary Real Estate Board, we can see what we would expect, which is increased prices and sales across all segments. The average price of an average piece of real estate in Calgary is now $567,000. Up about 6% from this time last year. Total sales are also up, with just over 2,600 properties trading hands over the course of July. Now, the real story to watch isn't about prices and sales, it's about the lack of inventory. There just isn't anywhere near as much for buyers to shop between, with inventory down by almost 35% from this time last year. Inventory is so low, in fact, that the current months of supply metric, or the number of months it would take to sell every house currently available for sale, is set at about 1.3. So basically a little over 5 weeks of inventory, which is incredibly low. This is very much in seller's market territory, and I don't think that this is likely to change anytime soon. Looking at each of the specific categories tracked by the Calgary Real Estate Board, detached prices now average $690,000, and apartment condos are less than half of that at $306,000. Semi-detached properties come in at about $617,000, and row townhouses are at $400,000. All of these categories are hovering around 10% higher than they were this time last year. Now, you might think that tight markets like this are good for our industry, but they actually present quite a few challenges, because with fewer and fewer listings coming to market and all of them flying off the shelves so fast, it can be very challenging to make a move from one house to another. So what do you do if you want to make a move? Do you wait it out for an easier market to do business in, or do you need to be ready to jump right away if the house you want comes up for sale? Well, to make your decision, it might help to take a look at what is fueling the fire for our super hot market, both in Calgary and across the country. We've seen some headlines recently that give us a little bit of a sneak peek as to how things are going to go at the federal level, which should trickle down to us regular Calgary consumers. So let's start with the recent cabinet shuffle of senior ministers by our Prime Minister, Justin Trudeau. He moved a few players around the board, and most relevant to our discussion, we now have a new housing minister in the Honorable Sean Fraser. Interestingly enough, Fraser is leaving behind the role of immigration minister in order to step over to housing, 2 factors very much related to housing affordability. I bring this up because as immigration minister, Fraser presided over the largest single year of inflows of immigrants Canada has ever seen, when our country added over 1 million new people in 2022. In fact, Canada's population growth of 2.7% in 2022 ranks as one of the highest in the world and puts us in the top 20 countries for overall growth, with almost all of the countries higher than us being in Africa. So it should be no secret that the quickest way to calm our real estate market would be to slow down immigration and allow the development and construction industries some breathing room to catch up and provide the supply levels needed to stabilize price growth. After all, more people means more demand for both rental and retail housing, right? Well, you can be sure that the new housing minister isn't going to want to make himself look bad and call for a reduction in immigration to make it easier on him in his new job. And right out of the gate, we saw this confirmation when he said that closing the door on newcomers is no solution to the housing crunch. This was supported by his boss, the Prime Minister, who put on this nice white hard hat and vest a few days ago to tour a construction site in Ontario. And he echoed his new housing minister's messaging by pledging his support to increase supply. So the takeaway in all of this is that the key metric underpinning housing demand both in Canada and in Calgary is more people moving into our country, and it's unlikely to change. Demand for real estate will stay strong and prices will continue to increase because it's much easier to let someone into Canada than it is to build a home for them to live in. Check out this graph I compiled from data available from the Statistics Canada website and the Canadian Real Estate Association, which shows the recent demand for housing has increased significantly more with increased immigration levels. But given that the supply coming from the construction industry is very consistent, it means only one thing: increased prices. For this fundamental demand effect to change, we will need all three orders of government to agree to solutions to accommodate such high levels of immigration. I think this is a tall order indeed, given that the electoral cycles differ from one level of government to the next, and each of these orders of government love to push their problems around to one another. Canada has never before undertaken a truly united approach to housing reform, and I'm just not convinced that we're going to see that happen now. So we can expect tight markets and low inventory levels to continue for as long as immigration stays elevated to the extent that it has been for the last few years. Now, another issue affecting inventory and movement is interest rates, and we just saw another jump issued by the Bank of Canada just a few weeks ago to bring the key lending rate right up to an even 5% in an attempt to slow down inflation and perhaps demand for expensive housing. But it just isn't working, as we can see from this month's sales statistics in Calgary. People value housing, they don't expect prices to drop anytime soon, and so they are agreeable to paying more and more money for their homes. And it makes financial sense too, because as long as prices increase at high single-digit rates, homeowner equity growth will outpace the debt that they're paying to buy homes, which will keep the party going for many years to come. Payments are getting higher though, there is no doubt about that, but will interest rates keep going up? Well, one fellow whose opinion I value is CIBC economist Benjamin Tall, who suggested that the Bank of Canada wants to see interest rates come down before the loans taken out in 2020 and 2021 mature, as over half of all of the mortgages held in Canada were written in those post-pandemic years, when the government issued a lot of free money and banks allowed homeowners to readjust their mortgages or even suspend payments in the face of all of this pandemic uncertainty. So if you were thinking of trading up or buying a house, perhaps consider a variable mortgage rate so that you can take advantage of decreasing rates in a few years' time. Anyway, Calgary's market is still very healthy. We currently sit at less than half the average sale prices of both Vancouver and Toronto, which gives us a competitive advantage for attracting more people and businesses to our city. And I don't think that this is likely to change anytime soon either. So there's a good bet that you see us again in a month's time talking about record prices and record sales for our Calgary market. Do you want to know what your home is worth, or are you considering buying a property in Calgary and are maybe looking for a top-notch agent to help you out? Well, Redline Realtors are truly exceptional, and we'd be glad to assist in your journey. Reach out to us via the link in the description and someone will get in touch with you right away. Thanks very much for watching, and we'll see you next month.